Sellers created notable damage by breaking below key daily demand, and they also made a lot of space over the local overhead supply, which is the all-time high structure right now. So, is the bubble that everybody is talking about popping, or is this just a dip to be bought? My name is Lamont, full-time trader, part of the Chart Guys team, where I head up our futures room and the swing report. In this video, we'll go over all that and more, so let's get into it. All right, so as we were talking about, sellers created a bunch of overhead supply, and they also took out this area of local daily demand, right? So we did find a decent amount of acceptance under the point of control of this structure over here, but there was a pretty solid bounce into the end of the week, and the overall market at least was kind of offset a little bit. The selling was a little bit offset because tech and healthcare and finance, they actually posted gains. So really, this weakness is really just from tech. And it's like what Dano always says regarding the major sectors. And to be fair, right now the Qs after rebalancing is even more weighted now in the S&P. But typically, how we do it at the chart guys when we're trying to assess whether or not there's rotation is we just look at the major sectors, right? So if you look at tech, healthcare, and financials, you put them all together, it's like half of the S&P. So if they're not all moving together, then you typically don't really see like true outright, run for the doors selling. And I wouldn't say that this is that. Like I personally don't think that this selling is too bad because like on the daily time frame, yes, we did, crack this prior all-time high structure over here, lost that point of control, lots of space for a lower high. All of that is true, but at the same time, if you just kind of zoom out to the weekly time frame, like this is all one big area of balance too, right? Like we kind of broke it up because the best case scenario would have been for these buyers to hold over this guy. But if you just view this as one big old structure, I wouldn't be surprised if that's just a point of control hold, right? It's not a picture perfect point of control hold or anything, but all that's happened so far, if you view all of this as one structure, which on the weekly time frame, it would just look like that, a little bit of balance here. It's not really that bad. Now, how will we assess whether or not things are getting bad is on this bounce now, right? So if this bounce continues to have legs, then the first goal for these buyers is to get back over 673.95 to get back to affirming this breakout. And then going forward, following that, they need to get back over this guy, right? 683.36 is that key upside reference. Well, technically, we should look for this first, 679.24, because you need back over 679.24 just to negate this breakdown from November 4th. And then we need back over 683.36 to affirm this all-time high supply right now as demand, which would then have these buyers positioned well for new highs. So again, if you look at XLV for the week, it posted pretty solid gain here over the 2022 high, right? So they're just trying to affirm this breakout again by holding over this 2022 high last week. And then for the financials, also just hanging out here near the high. So, and then finally, we've been watching the fear and greed index, and it was already at fear, right? Hang on a second here. It was already at fear, so this last week was at fear, and now that we've had a little bit more selling, now we're in extreme fear again. Major tops typically don't get set like that. Normally major tops get set when we're pressing, greed and extreme greed. Extreme fear is typically a buy the dip kind of situation. So you consider all of those things, sector rotation, fear and greed index, in extreme fear, and also the amount of retracement, right? Not really being terribly meaningful yet, despite us getting back under this prior all-time high. I'm personally leaning more towards the idea that buyers will likely look to step in and play defense. And again, how are we going to assess that whether or not they're doing a good job of that is really just this first key level for, next week. So I think our trade zones have come into play now. Yes, so our SPY zone, this is what we were looking for, recall. And I didn't draw that structure out as like this, right? We didn't do this for to establish this zone, but I'm pretty sure like if we just sync this globally and look at it over there, essentially it ended up being right at that point of control. So I think we used the high volume area as a bit of a reference. So this is in play now. I do think it makes sense. I still think it's a very reasonable location for trades. No different than all of these other setups. I guess not group 10, but 9 and 7. I think there was another one, 8, right? So I guess we don't get this. It's the same logic, right? We're just looking to backtest prior areas of demand, and then if these buyers defend those prior areas of demand, then there's really no problem. So I stand by this trade zone heading into next week. And moving on then to the Qs here. So the Qs, again, the Qs are really what dragged down the overall market, right? It's a pretty notable decline. 3%. That's the biggest decline since back here in March. So pretty notable. But at the same time, what are they doing? Really just holding this guy, right? Like if we did that same thing in the Qs, zoom out to the weekly time frame. Well, we don't have to zoom out to the weekly. We could, we just view all of this as one big block. I guess we could start here. It actually didn't even get down to the point of control, I think. Hold on, let's see here. It didn't even touch it, right? So that is not strong, right? This selling is not terribly strong. Again, it's notable damage in the sense that we got back under this breakout point. The gaps have been filled, and you took out this structure, but pretty solid volume here on this buying, and this so far is a miss to get to that point of control. If you look at it on a zoomed out and view all of this as one big old block and remove all of these little kind of more granular levels here, which I think is a very reasonable way of looking at this structure. In fact, it would also clean it up visually, so I'm actually gonna switch over to that because I just don't like when things are kind of cluttery here. So we'll view it as one big old area of balance, and we're still gonna care about this key upside reference. It's the same as the SPY. If this bounce is going to get some legs here, then we need follow through on Monday. Fill this gap because it actually didn't fill, right? It didn't fill. And so 613.18 need over that to get back to affirming this breakout. And then the next upside reference, again, very similar to SPY, we care about 624.03 to negate this breakdown, and then 631.88 to affirm this guy's demand, and then have these buyers positioned well for new highs. Okay. I wouldn't be surprised, honestly, if we just kind of balance under this guy and over this guy. If we can get back over 613.18, I don't know that we should expect like a V-shaped recovery. I think that might be a bit too optimistic. But any balance over 613.18 would be fine, right? Even holding over the value area high 609.47 would be constructive relative to this local area of demand, because that would just mean value is still building higher relative to this demand, which it probably is right now. Like if we did a developing value area, oh, maybe not, I guess. It is still printing higher right now. So that's really it for the Qs. I think we had a trade zone here too. Yep, so it's in this trade zone. I still stand by it as well. I think it's very reasonable. Moving on to the IWM here. So even the IWM kind of showed you this pretty solid defense here, because what the sellers managed to get done last week was rotate back down to the lows of this all-time high, prior all-time high structure here. The lower line over here, the lower dashed yellow line, is the low of this range. And so all that's happened so far is another drop and pop here, right? Drop and pop here, rotate to the highs, drop and pop here, rotate to the highs, drop and pop here, rotate to the highs. So are we seeing another drop and pop here and rotate to the highs? I don't know. Nobody knows. But if you can just keep holding over the point of control at 240.88, that's a pretty solid start. And then if you can get back over 244.98, that's this prior all-time high over here, then again, this all of this chop is still constructive. Really, we care about 240.88, right? We just want to keep holding over 240.88 to affirm this prior all-time high structure as demand, which would then keep these buyers positioned well for new highs. I think we have a trade zone here as well. Sure. And I stand by this trade zone. It's essentially the same as this one back here. And it's just designed off of that prior all-time high structure. All right, moving on then to the Dow. All right, so the Dow also looking just to backtest this prior area of local daily demand. I think every trade zone is probably in there. No, I actually missed it, but I stand by that trade zone again, just designed off the point of control of this local area of daily demand. And what should we care about now? We should care about 470.38. So everybody's pretty similar, right? Like they just want to get back to affirming this breakout over the October high. Technically, I guess it's that one here. Um, this guy 471.25 need back over there to affirm this breakout on the 24th. So everybody's trying to get back to affirming the October 24th breakdown, except for the rut. 24th breakout's correct. Um, all right, so daily chart's technically bearish, lower highs and lower lows, but so far all that's happened is a back test of the value area high of this local area of demand. So I'll just mark it up here. Right. So far, all we've seen is a little drop and pop at the value area high. Value is still moving higher relative to this block of demand over here. So again, the damage is not really that bad, and we'll see how it goes. Oh yeah, one more thing, right, regarding like the bubble, right, the AI tech bubble. You know, it's usually not like a major top is usually not set with like everybody and their mom looking out for it. And while it's certainly problematic, I would say the way that the certain companies like the hyperscalers and whatever a lot of the AI focused companies are kind of just like reinvesting in each other. It's obviously not ideal, but at the same time, a lot of these companies, to avoid taxation, have been hoarding cash outside of the US. So and within it. And so, you know, they do have large war chests that they could kind of, you know, deploy over a long period of time potentially to develop this tech. So, I would be a little wary of like, bubble popping because there's just so much talk of it. But we'll see. Yeah, we'll see. So we'll just keep it technical and monitor these key levels and take it day by day. Moving on to the dollar. All right, so the dollar, it's really still just bouncing here. So initial pop and drop at the point of control of this key structure over here, which is what maintained all of this balance throughout all of this. And I still stand by both of these trade zones. There is still a lot of space for a higher low right now over 98.350. And right now the buyers are doing just fine, right? They're still, this should actually be over here, right? You can make an argument for both, but technically this is the most local breakout. So I would say anything over 98.940 is still affirming this breakout. I think it's notable that so far these buyers are defending the value area low of this structure that's contained all of this balance since April. But it's really just the start here, right? You need acceptance over 99.800 to start affirming this structure as demand. Affirming this structure as demand would increase the potential that we're looking at this kind of balance going forward. So I still stand by both of these trade zones, and if you're in from down here, you're just walking your stop up. Your new stop can just be under this guy over here, right? Because this is the local daily demand zone. So if you were a buyer in here using this trade zone, your stop can be under 97.805. And I think last week I spoke about, maybe not scaling into this trade zone, but looking for a failure at this point of control and then selling the move back down under it. And if that's going to be the case, then, you hit that sell here, your stop is over here. Take profit no later than 98.940 because that would be negating this breakout, right? So these buyers are doing okay as long as you're holding over 98.940. Leave your stop over there and then see if the sellers can follow through again with another rejection from, again, just this key zone over here. All right. Moving on to gold. So gold, they're trying to base here, right? Like this is not that bad at all by any means. The last area where there was any amount of meaningful consolidation, really on the higher time frames, it's this. So any kind of bigger picture chop over all of this balance is actually just fine for gold. And they're not even close to coming back down to 3,500. You're still 500 points away from there. So And I think it's pretty notable that the seller, so, we're just kind of watching these steps that were built on the way up, right? Here you have this step, this step, this step, this step, and this step, right? These sort of areas of sideways trade. And the market tries to hold price over here initially, right? At this first step, they stall, can't hold it. Okay, fine. We walk down to the next step over here, and they do hold it now. So now you're trying to base here. If you just end up basing here and you can't even get back to like this area where there was certainly more meaningful area of value established, the selling is just not terribly strong right now. Now that being said, I don't care to be terribly aggressive here. I think it would be more prudent to look for a break above this base here, then look for a back test play as a buyer against this guy. Then our stop can be down here, and then we can be targeting that. I think that's a safer bet for gold. So gold more of a wait and see than take action immediately. Okay, so for NVDA, pretty sizable drop. Again, it's kind of certainly more and more discussion about the potential of an AI bubble. Again, I do think it is. I hate to say this time is different. I don't mean to suggest that, but there are some differences compared to, like say the dot-com bubble, or definitely financial crisis is very different. But for like the dot-com bubble, it's very different. Like these companies already have a lot of revs. During the dot-com era, a lot of those companies' valuations got crazy and they didn't have any revs. But right now, this current hype run is being led by hyperscalers, NVDA hyperscalers, and companies that actually do generate a lot of revenue. Additionally, the it's far away from it, but AI has the potential to affect a lot of different industries. So I don't want to say this time is different. I do think that there's probably going to be a major retracement, but I don't think that the comparisons have been, at least none that I see, have been very good in my opinion. So, and I bet you that if you were to look at I don't know that the fear and greed index goes that far back, but I bet that if you were to look at it, all the way back, I don't think we have that much history, at least not for the CNN one. But I bet you that if you were to go, all the way back to the dot-com era, that I really doubt that high was set with fear. I really doubt it. Anyway, so for NVDA here, all it's really doing right now is just backtesting this big block of demand. And I think we had an aggressive area, right? I still stand by this. This makes sense. This is more aggressive approach. I would prefer to look for those plays against here. I'm not sure where that is. Yeah, I would prefer to look for this guy, as we've talked about, ad nauseum in prior videos. But this aggressive zone is fine too, right? I'm not terribly interested in it because I just prefer to be a little bit more conservative. But it makes sense, right? There's a lot of value established here, and as long as you're holding over this big block of demand, any balance over here over this guy would be constructive. So if the buyers can just manage something like this, which is just balancing over all of this, then that's honestly fine. They are negating this breakout, so that's no bueno. So we do want to eye 195.62 next week. And that's really it. Tons of space for a lower high. The new daily no change level should now be here, 201.41. This breakdown is affirmed. It's almost under 201.41. And still need a line here though. And that is really it. Moving on to Bitcoin. So Bitcoin, like we were saying in the previous weeks, recycling that trade zone that we had set up here, I didn't love it anymore, right? I didn't love this rejection from the value area low. I didn't really love, I mean, this was a news-based thing, but I didn't really love the size of that, right? Like if you think about it, one candle negated a ton of pump over here. That's like 6 days, 7 days of pump, and then this one candle just takes it all out. Not typically what you want to see. So again, I'm apprehensive. I was apprehensive, but now of course, that was it did seem like a decent decision because that would have been a stop out, although this trade zone's already worked a few times. Now, what do we care about? We care about this guy here, 979 for 8.56. The sellers, they should be trying to negate this breakout here. They failed to do so over here. They're close to doing it again over here. This should be their objective. And if you zoom in, remember, we're kind of using this guy as a gateway structure into this demand from the bottom. And you just zoom in a little bit here and you'll see a lot of detail, a lot of battle for these key levels: value area high rejection, value area high rejection, point of control rejection, point of control rejection, value area low, double top. So, market very clearly telling us that yes, this is a key reference that we should be monitoring here. And if we do see lower lows next week, again, we're just watching 979 for 8.56. Got to get back under this guy to negate this breakout, and that would be pretty notable, right? At this point now, the more acceptance that you find under this guy, the more likely that we're looking at all of this as balance, right? We could be looking at a situation like this or a situation like this where you just kind of trade sideways. Now, here's the last time, right, that the monthly made a higher high lacking follow through after a major breakout, right? Major breakout, higher high lacking follow through, and then we just chopped around for a long time. So that's kind of what's happening here, right? A couple of higher highs, honestly, lacking follow through. So I wouldn't be surprised if we're looking for some bigger picture balance here, which would then kind of open up 74K, right? So again, that would not be bad structurally from a bigger picture perspective. If you just chop around here over this, then it is still higher prices relative to this last area where we balanced for 3 or 4 years. So that's what I'm thinking, bigger picture, and it's really a matter of, okay, well, can these sellers keep holding on under 10349 8.85 to affirm this as supply? If so, then that thesis of bigger picture balance would increase. The potential for that would increase. All right, moving on to Ethereum. So Ethereum, like we set up this sell in Ethereum because it didn't make a new high, right? So while we were apprehensive to be buyers, right, in Bitcoin, right, based off of what we all just discussed, it did break to new highs. So Ethereum was our sell vehicle of choice because it did not break to, or rather, it broke to new highs and barely, and then rolled over again. So far, this trade's working out pretty well. If you hit this zone, you probably want to pull these asks over here, walk your stop to like over 4295.57. And right now, at least, the sellers are doing a pretty good job, right? They're holding price under this fella over here, which was the consolidation of this move. And now, from if we were going to reject from this structure over here, we don't really need this, right? From this structure, 4017.56, its point of control, that's this guy. That's this fella over here, 4017.56. Major rejections throughout all of this balance here. And so that's why we designed the trade zone as such. And if you keep affirming it as supply, then it increases the potential that we're looking to get back down here. All right. So I stand by this very reasonable spot to hit that sell. I would walk the stop to over here, take some profits. I probably makes sense. That's a pretty sizable gain from even from just this lower fill here. You're still at 15%. Might as well chop this up, walk your stop here. And then if the sellers can manage another area of supply and breakdown, great, then walk your stop to over here. All right. And then finally for CCJ, I'm not changing anything to this either, honestly. Like it does look fine. You're just back testing this area of demand over here. Lots of space for a daily lower high under 110.16. But, again, my opinion is that we'll likely see a period of major consolidation like this or like this. Just like this was major consolidation, major consolidation, major consolidation, major consolidation. So new breakout. I would imagine that eventually we'll see a major consolidation. And if that's going to be the case, then I'm most interested in what it looks like over here. I know that's the same thing that we've been looking at for weeks now, but that's the name of the game when you are swinging on these higher time frames. All right. So that is it. Let me see here. Got some trades to review. Not too many trades. Been looking to kind of pump the brakes a little bit, take a little not time off, but just trying to be a little bit more relaxed during the week. Don't really want to don't really want to work too hard. Holiday season is always stressful, and so I'm just pumping the brakes, especially getting ready to do taxes and stuff, and friggin' hate the paperwork. So let's get into it. All right, so I didn't do anything on the 3rd. I was out for the day. I'm very often out on Mondays, and I think Monday was actually a pretty solid day of trade. No, it was whatever. All right, so for 11/4, let's see, what the heck did I do on the 4th here? Oh, this should be in here. Okay, so on the 4th, initially the stop out here. So let's start with the daily context on the 4th, and the 4th is here. All right, so we opened up really weak. It was a gap down, so I guess I was just looking for a roll under the open to target this point of control. Although I do remember acknowledging in the morning rundown, I do a morning rundown for the futures room every pretty much every day except Mondays. Sometimes Mondays, but usually not. It actually already got to the target during the extended trading, so I was a little bit apprehensive to play that momentum right off the gate. But I still tried it because they failed to get to the open here. So I figured, all right, well, if we're not going to get to the open here, roll back under the depot. They probably try to get to the overnight low. I was wrong, and so I stopped out of that. That's just this over here, eyeing the potential pass back under the open for RTY. And then I sold the Depop because I figured that was potential failure. And it was cheap, super cheap. So, tried it there, gave it some wiggle. Pretty slow tempo in the selling was a bit of a red flag, and then just stopped it up. And then I'm saying, all right, if RTY 1 minute stair step into 2465.2, then I'll take another shot. And then I'm also acknowledging that 2463 is the 1031 low. And that's just these levels over here. Let's see the 4th. It's just this guy. Oh, I thought it was marked up. That's just this guy and this guy, right? 65.2 and 63. 65, yeah, 65.2 and 63. And so I'm thinking, all right, well, these are kind of the levels of change, right? This is the October 31 low. And then this over here, 65.2, that's that lower, that's the level that they lowered load through and then couldn't see fall through. So this is a notable area of change, right? This breakdown and then this breakdown continues to be affirmed as long as under these two key levels. So I'm thinking, all right, these buyers, they're strong right now, but they don't really create meaningful change without getting back over these two guys. So I'm watching this guy for this area for the potential, hey, Mr. Barter, for the potential of a trade if we stair step into it. And we do stair step into it. Cat just came in and left. Okay. Just wanted to know that he could be here. Um, yeah, so I looked for this stair step here and sold this breakdown. Sold the 1 minute stair step after testing that level. And it's actually should be here. This is marked wrong. Should be here. This stair step here. Um, let's see. Looking for a 454.5 back test. And that's just this guy. 454.5 is just this tiny little area where they consolidated before another breakout. It's just this tiny little overlap here, this like inside bar. I figured if they're going to have problems on the way back down to the regular trading hours low, then it should be there. So I get that chopped it, and then I'm saying looking up for more above the regular trading hours low. That's over here. And it takes, I don't think that's right. I'm pretty sure it was a lower target, but either way, I'm looking for a regular trading hours low, and this one now it makes me wait super long time, super long time, almost stops me out, but finally gets there. I chopped it up, and then it really didn't look like that trade was gonna work. But again, it's like you just never really know. Like I know people, everybody has a tendency to kind of want to think, is this trade going to work? And then like you look at the chart and you see patterns or whatever, and it's like, oh, it doesn't look good, and then maybe you get jumpy. More often than not, you should just leave it alone. Like there is certainly something to say regarding like intuition, but more often than not, just accept the risk and just let it ride because it may look terrible and it might make you wait hours, but if the trade is not invalidated, it's not invalidated. So anyway, take more off here at 12:21. It's over here, 12:21. And then I walked the stop at the end of the day to over 2461.2. And that's just because 2461.2 is here, right? Yes, I just walked it down here at the end of the day. And then moving on to the 5th. So on the 5th here, all right. So on the 5th, it was this. So I was looking to add to the trade here because they failed to get to the overnight high. If the cash market buyers can't get over the overnight high, then obviously those buyers are relatively weak. So I just hit that sell over here. And let's see, I walked the stop first to a little bit lower, 2452.8. And then I sold the pass back under the overnight high, looking for the open. So that's this chop over here. And then look for more at 2441.3, which is just this guy. So it's the same logic as before, right? This is that lower low from the prior day that they didn't see follow through. So the sellers, if they're going to be weak here and here, they should try to get back to affirming this breakout. So I look for another chop there, chopped it up, and then stopped the ad and everything on this move up. And that was pretty much it. And then I didn't do anything on the 6th either. I forget why. I think I just didn't really see anything that, oh, because we opened up in the middle of the range, so I wasn't looking to be aggressive. And then I didn't really see any opportunity for a follow-up trade. I also just don't like to trade after like 10 or so. So if I don't get it on the morning, then I just pretty much don't do anything. And then finally for the ES on the 7th here. Yeah, okay. On the 7th, so I stream in the morning, so I didn't do anything then. And then after the stream was done, I'm over here and I'm thinking, all right, this is the 15-minute breakdown point, 683.50. So 683.50 is over here. That's this guy over here. And so I'm thinking, as long as these sellers are holding under 683.50, then they're going to keep pressing the issue here, right? Because this breakdown continues to be affirmed. So I just look, I'm saying, hey, listen, I'm eyeing that. Well, actually, I was eyeing the NQ first. I was eyeing the NQ, but the NQ didn't get there, or at least not in the time that I needed it to be there, because I had to go in the afternoon. So we're over here, and I just sold that move back under that breakdown point, 683.50. And then gave it a bit of wiggle here. I was looking for a chop of 675, and 675 was just this little area of consolidation. So I figured, okay, if these sellers are going to have problems on the way down, it should probably be there. Makes me wait a little bit, but finally does get down to that target. And then I was looking for another exit at the deval, which was pretty much the same level as the balance at the lows. So over here, this is that balance right before the balance at the lows over here. So I figure again, if these sellers are going to have problems getting down to new lows, probably over here. Chop, chop, stop it out, and then that was it for the week. No home runs, just a bunch of base hits, but you know, a pretty solid week from just putting together some base hits, so no complaints on that. And that is it. So, yeah, that's it. So, anyway, appreciate y'all tuning in. Thanks for sharing some of your time and energy with me. If you wouldn't mind hitting us with a like and subscribe, that would be awesome. Helps us out. Appreciate it. Right. Also, if you're interested in the swing report, that would be 2 trade ideas sent to your inbox every week. Updates from me and Dan. Any trade that I do take, we'll just post every single action that we take. And if you want to hang out with us, trade futures, get these alerts sent to you live in the chat room, talk to us, ask us questions, whatever, then check out the community. Links in the description below. Otherwise, again, appreciate y'all tuning in, and I hope to catch y'all next time. Farewell.